All right, let's look closer at the results from Amazon with Charlie O'Shea, retail analyst at Moody's. And then for Google, here to talk about the big number there, Mark Mahaney, who we use frequently, RBC Capital Markets, lead tech analyst. So, Charlie, we've been talking about Amazon. When there's troubles, I remember it at 15, 16, 1700. I mean, we're mid-1900s. It's hard to really make a big deal out of not setting a record in profits for the fifth straight quarter. That's the one thing they missed on, but 20% revenue growth just seems staggering.
I don't know what people expected, honestly. The announcement on the call last quarter, we're going to spend $800 million in Q2, and there's more to come. I think there were a lot of folks that thought that it was $800 million. It's multiples of $800 million. So you've got to lay that over increased competition, other expenses, and the kind of the ripple effects of moving into next day delivery, the impact it has on, as Deirdre said, warehouses, fulfillment, all that kind of stuff. It adds up. And what we saw this quarter was, if you X that out, Amazon had a phenomenal quarter from a profitability perspective. And these are investments. This isn't just lighting money on fire. This is investing for the future, trying to increase its competitive position with brick and mortar.
It's the first time they haven't beat expectations in 2 years, so 8 quarters. That may be the only.
And again, I think I've said this before, the expectations sometimes are a little, for me, rosy.
Yeah.
A lot of times the math just doesn't work when you look at where people think they should be.
So the cloud business is still growing gangbusters, but it was growing a little slow. It wasn't 40%, like 36% or something in revenue. Is that Microsoft or what are they? That's still going to be a driver, no?
Yeah, and that sector is getting increasingly competitive as well. And the competitors there are every bit as good as the Walmarts are on the retail side. Trees don't grow to the sky. And at some point, that growth is going to level off a little bit. Margins are going to compress a little bit. That's just a natural evolution of the business and the sector. And I think we have to be prepared for that.
I don't know if you've weighed in on Mnuchin's comments. I mean, that would scare me if he spoke for the administration.
Which it seems to me he usually
He kind of does.
Always so.
The president, by the way, makes his own comments about Amazon.
Well, that's got to do with the Washington Post. That's not destroying retail.
I'll speak to it as a retail analyst, not a politician or a political analyst. I don't see where the analysis gets you to Amazon having that much power as a retailer. When you look at it and compare it to Walmart, it is much smaller. When you look at it from a third-party perspective, Amazon has provided these third parties with the ability to sell online. Let's think about what brick and mortar has had to do over the last several years, adapt into the online world. Walmart has spent billions. Target has spent billions. Best Buy. Every brick and mortar retailer that's tried to move online, it's taken a lot of time and it's cost a lot of money and they've drilled a lot of dry holes. If you're a smaller retailer, you don't have the money to do that, but you need an online presence. So you outsource it to Amazon, you have to pay for it, but at least you're there.
Okay, but in terms of defining the sort of antitrust issue or market around Amazon, you could say small on a relative basis if you define retail broadly. So actually the way Treasury Secretary defined it, it would be small, right? Because if you say electronic retail, then you're at, what, 50%? So now that's
Best Buy is still larger. As an electronics retailer, Best Buy still has a larger
for electronics,
share.
But I'm saying,
yes.
But I'm saying
it's
overall online retail, they're about 50% of the market.
If you count GMV, they're around, our calculations have them at around 40, well, if you give them 4x for GMV.
Even if they're at 40%, the next largest is eBay at 6%. So I think that's where that argument comes from.
And if you look at it through that lens, but we don't look at it through that lens, and I don't think that's the lens for which to look through it. You have to look at it in the context of full retail from where I sit, and there's no question that Amazon has been beneficial to the consumer, price transparency, all that sort of stuff, and has helped its third-party merchants. Yeah, they have to pay up, but at least they're getting the ability to do it without having to make the investments themselves and potentially failing.
We don't want to ignore Google. You know, Mark, I just looked you up with my Yahoo search engine. Actually, I didn't. No one else did either. I mean, if there's anyone that probably has to worry about being dominant, it's Google. And the results this quarter, it's back to search, isn't it? I mean, they keep trying all this other stuff with the money that they make from search. Any success in these other areas that we should, really say, wow, that's awesome, or still kind of mediocre?
Okay, I like the setup, Joe. Maybe 3 points here. First is I think that what was really unusual about Google wasn't this quarter, it was the prior one where revenue came in short. This quarter, I thought this was kind of back to norm. This was a company that for about 9 years, believe it or not, has sustained an average of 22, 23% organic revenue growth, and they did it again this quarter. It was the last quarter where it dipped down to 19%. That was kind of the head scratcher, and it still is. So the core advertising business seems to be as healthy as ever, but there were 2 new call-outs last night that I think were part of the stock jumping up as much as it did. That was the second best outperformance in the aftermarket that we've seen out of Google in about 3 or 4 years. First is that they called out Google Cloud, said that it's now at an $8 billion revenue run rate.
Is it profitable?
We don't know. We assume so. I don't know why you wouldn't look at AWS's business. I mean, AWS and Amazon prove that cloud computing can be very profitable at scale.
Why don't they
the second
say
call
it?
out was
That would help, right?
Yes, it would help. You're right. The other place where it would be nice if they gave more detail was YouTube. Now, they give out these little anecdotes. They always tease us with those. And there they said that the number of channels with more than 1 million viewers or subscribers is up 75% year over year. So it's a small little data point. It kind of proves what you already probably thought, which is that YouTube is pretty big. Oh, actually, the last point, Joe, real quickly, is they upped their share repurchase authorization by $25 billion. Look, they've got $120 billion in cash sitting on that balance sheet. They are absolutely doing the right thing by increasing that share repurchase authorization. Probably should have done it before, but it's good news.
Okay, so there will be, it's been posited, there'll be more advertising. You see more ads on maps, and that's easy for me to, and on YouTube as well. And after, how long have they owned YouTube, Mark?
You stumped me on that one. I don't know, 10 years or something
More,
like that?
yeah,
Something
and
like that.
Still no, we still don't know how that does financially. No idea.
No, and it'd be nice if they disclosed it. We think it accounts for about 20% or a quarter of their ad revenue, so it's probably about a $20 billion a year business. If that thing was trading on its own, it would probably be a $100 billion plus asset in terms of market cap, market value. But no, we don't know. Our guess is it's around $20 billion a year.